Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, August 30th, and we're almost upon Labor Day, so a nice long weekend up ahead. We do got some economic news releases, and we usually start off on Thursdays with the weekly jobless claims. We had 374,000 people applying for unemployment last week. We figured that number will kind of come down to about 370 range this week, and basically we have the same number as last week. So still a little high, the people applying for unemployment, which is obviously not a good sign. We also have numbers for the personal income, what people are earning for July. So back in June, they had a 0.3 raise, a percent increase in their income. We figured that would kind of continue as a forecast. That would be for July, and it was. So basically, they had a nice increase in income in June, increase in July at the same rate of 0.3%, which is obviously very good. Consumer spending. So back in June, nobody was spending anything. It was kind of dead. And then we figured it would jump up to about 0.4%, and forecasts were correct. So people started spending more money in July, which is obviously a good sign for the economy. Now we got the core PCE. What that is, it's the personal consumption expenditure. This is actually the Fed's favorite gauge. So being the core, they've already stripped out the food and energy, which can create volatility in there. So this is the Fed's leading gauge for inflation here. And we had a 0.2% for June. And then, so we figured it would kind of dim down to about 0.1 for July, and actually it was 0. So basically it's showing that there is no inflationary problems as of yet. So this is something to kind of keep an eye on, but as of right now, there's no issues with, if anything, it could be maybe the other way around, maybe the deflation. So something to kind of watch for. All right, so let's jump over to the headline news. There's not a whole lot on that side. Stock market is currently down. The Dow is down about 123 so far this morning. A lot of it has to do with, again, there's a 3-year low on economic confidence in Euroland, which is like our consumer confidence. So people aren't feeling too well in Europe right now. So they're kind of looking at that as the number that's kind of switching it today. So the big thing this week is that they're kind of gearing up for tomorrow's Bernanke speech. There was a big gear up for Draghi's speech, see what the European Central Bank was going to say, but because he didn't come to the Jackson Hole meetings, that was canceled. So that puts more relevance into what Bernanke is going to say tomorrow after the meetings in Jackson Hole with all the global central bankers there. All right, so let's go ahead and see how bonds are doing today. As you can see, we had a pretty good drop yesterday. So as a result, today we actually made up ground and are upwards. So we closed down about 103.9 here yesterday. And right now we're at 103.38. So we're up about 30 basis points. So we got a nice improvement in the interest rates as a result. So if you take this number all the way up here, that's a pretty big spread here. And obviously that's a nice improvement in the interest rates. All right, folks. Thanks for stopping by. You guys have a wonderful day. I will see you guys tomorrow. And if you guys are off on your Labor Day, have a good, safe Labor Day weekend. Take care.